Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and unfortunately I am out of cinnamon, and this is a problem. Many of you know that I like to have cinnamon in my coffee, and so it's time to make a trip to the grocery store. But I'm going to power through this, and I have a very interesting little show here for you this morning, because I've done a little bit more digging on what I was talking about yesterday with regard to futures and ETFs. And I believe that this is exactly how this is all unfolding, what I'm going to show you today. And I'm not, maybe manipulation's the wrong word. I think this is just the traditional financial world. I think it's just a way of doing business. But it's important for you guys as retail investors to understand not to let yourself be manipulated in what's happening right now, because we are literally standing at the foot of a mountain that is going to be the largest bull run up in the history of bull runs, in my opinion. And I'll go over all of this as we go along. But before I get to that, I wanted to give some credit here. Jerry V. Hall 1 at Jerry V. Hall 1 gave me this first article. Go follow him on Twitter. He's an active XRP guy. He sent me this article. Remember the other day we talked about how I was talking about how the SEC is going to approve an ETF here because they're not going to let all these other countries do it while they sit on the sidelines. The U.S. will make sure that they conquer this market. So there was an article a few days ago where Switzerland had started it was called the Amun Crypto Basket ETP, and it had XRP inside of it. Well, they've launched it now, and the only thing I wanted you to get out of this is I wanted to read this one part to you. They're talking about how even in the down market, they're talking about how crazy that people are going for this, they call it an ETP over there. Still, its turnover of $425,000 a day beats a number of products in silver, crude oil, and gold trading on SIX. High volumes are typically a sign of investor enthusiasm in a given stock or financial product. To be sure, those volumes would be considered paltry for larger exchange-traded products in the U.S., like the Spider Gold Shares ETF, which clocked the average daily volume of 987 million. As for Amun, the fact that volumes are so high could indicate that there's a lot of pent-up demand for buying digital assets, according to market structure specialists who spoke to the block. You're darn right there's a lot of pent-up demand. The demand that is pent up, and I'm going to lay it all out for you today. You're going to love this. Be sure you finish this video, because this is exactly what I'm going to give it to you in phases of what they've done and what I would do if I were them and I had the power to do it, because this is how it's all happening and is going to happen. Moving along, I wanted to show you this. This is from at XRP Crypto Wolf sent me this. He says, why doesn't CoinMarketCap calculate the correct market cap of XRP? Sounds like they're doing it on purpose, just like how they plan to remove South Korean exchange prices on January 4th without notifying anyone ahead of time, so they could manipulate and crash the entire crypto market. Well, I've explained this on my channel before, but some of you may not have heard me say it. Last year, when we had the market run up in December, one of the triggers that caused the market collapse was CoinMarketCap used to reflect South Korean prices, which were way ahead of, they would be like at $3.75 XRP, when here it might be at $3.40. But what happened is, overnight, without telling anyone, and many of us, including me, think it was done intentionally, without telling anyone, people went to bed one night and saw one price on CoinMarketCap, like XRP, I don't remember what it was, but let's say it's $3.50 when you go to bed. The next morning they wake up and the price is like $2.98. And it wasn't because anything changed or anybody sold XRP. It's because CoinMarketCap just decided, oh, we'll get rid of the reflection of the South Korean prices, and we'll just drop that off, and we won't tell anybody. So people woke up and freaked out, and it literally triggered the sell-off, and it was a major part of that sell-off, and that's what he's talking about here. And so he referred to a tweet by Corey Johnson, where Corey Johnson said, imagine if they calculated the market cap correctly. And he's referring to this article on CoinDesk. XRP nears longest stretch as the world's second largest cryptocurrency. But I think the picture's pretty clear there. XRP is going to go over Bitcoin. We've talked about this, but I want to move along from here. But I thought it was important to show you those few pieces of news. Okay, yesterday, I talked about, I showed you a video. I think the guy's channel, I believe, was Altcoin Daily. And anyway, he was talking in his video about how in history, and he was talking about gold's history. He was talking about how back in the 70s, gold futures were introduced, and gold was running up pretty big time, and then they introduced futures. And all of a sudden, futures are what allow people to manipulate markets, because they can short markets. They can do all kinds of tricks of the traditional finance trade. In fact, futures were probably created for the purpose of manipulation, if the truth be known. Well, from the time that they introduced futures in gold, you see what happened. And then along here in 2004, I believe it was, the gold ETF was introduced, and look what happened then. And I want you to really let that sink in. They're showing you Bitcoin now. Remember, back in December of 2017, I think I pulled the article here. December of 2017, Bitcoin debuts on the world's largest futures exchange, and prices fall slightly. Well, we had quite the run up, but don't think that it's a coincidence that those Bitcoin futures. Now let's remember, at the time, last December, remember, traditional financial firms still were not in. They still are not in as we sit here today. So what do? Do you think that here's the question you need to ask yourself. Do you think that the people at the New York Stock Exchange, or the people with Fidelity, or the people with Goldman Sachs, or the people with Merrill Lynch, JP Morgan, do you think those people know the history of gold and how futures, not just gold, but silver and other commodities, do you think they know what the history is of when you launch futures, what can be done to these markets? So that ETF's introduced. Well, let's not just look at gold. How about we look at oil? Okay. Now this, I didn't have the futures, but the oil, when the oil ETF was introduced, look what happens. So this is from 2005. Oil ETF is introduced. And this is what happens. Okay. So, and they were down, I think it looks like around 70 all the way up to 140. Okay. I just wanted to make those 2 points. And then now I'm going to show you what really matters. You remember this article from maybe a month or so ago? Let's see, November 13th. Okay. How ex-JP Morgan silver trader's guilty plea could boost manipulation claim against the bank. Okay. Well, I've been hearing for years and years and years and years and years about how JP Morgan had been manipulating the silver market. But you know that's not the only company or the only manipulation that goes on. Of course it's not. So let's see how JP Morgan does it. It goes something like this. JP Morgan inherited an enormous short against silver when they absorbed the collapsing Bear Stearns, who had initially made the bet in the 2008 financial crisis. By continuing to short the stock on paper while simultaneously physically buying it, JP Morgan managed to cover that short on the cheap and accumulate the single greatest stockpile. Listen to these words. Accumulate the single greatest stockpile of physical silver ever amassed in the history of the world. Okay, so they short it while they accumulate it on the cheap. Okay, so when you short it, it drives the price down, and then they're accumulating it. All right, well, enter the CME. I wanted to make sure we remember the COMEX is primary futures and options market for trading metals such as gold, silver, copper, aluminum, formerly known as the Commodity Exchange Inc. COMEX merged with the New York Mercantile Exchange in 1994, became the division responsible for metals trading. CME, launch of CME Bitcoin futures contract comes a week after the first Bitcoin futures launch on the established exchange CBOE. Okay, so Bitcoin futures are launched. And from that point, really until today, we've had one of the worst down markets in Bitcoin, and thus they all. I mean, of course, Bitcoin has been followed by everything for quite a while now. So we've seen this terrible downfall. Well, what is going on behind the scenes while that's going on? This is an article from yesterday, 2 days ago. Bitcoin falls to 3.4K as retailers panic. Are institutional investors accumulating? Well, we've been hearing all year long about how the over-the-counter market has been going crazy while the retail market has been going down. Okay, and so I want to give you, this is the digital, if the digital asset investor was going to play the same game that Wall Street has played for years and years and years, let me give you my plan. Okay, this is what I would do. This is a 5-phase plan. Okay. Phase 1, in December of last year, I would have introduced Bitcoin futures. This is what I would do if I was all of these firms, Goldman Sachs, JP Morgan, all of my institutional investors, Fidelity. This is what I would have done. And you tell me if your gut tells you that it's anywhere in line with what we've been witnessing for the past year. Phase 1, I would introduce Bitcoin futures because I know that the entire crypto market follows Bitcoin. And so if Bitcoin futures could be manipulated to drive the market down, that's what I would do. Okay, so I would introduce the futures, and I would do this knowing, and I would be talking to my buddies over a glass of wine on the weekend and saying, okay, this is what's going to happen. These futures, we're going to short Bitcoin because the market's at this all-time high. We missed getting in on this, but we're going to fix that. I would short I would short Bitcoin, and then phase 2 would be the prices being driven down. Okay, those Bitcoin prices and all the altcoins would follow. My phase 3 of my plan would be that now remember, Circle's just one example of an OTC firm. Circle provides access to institutional people and others and individuals through the OTC market. Goldman Sachs is a part owner in Circle. And I'm not saying Circle's doing what I'm doing. This is my plan. Phase 3 of my plan is that I would buy as much as I could possibly buy in Bitcoin and other currencies in the over-the-counter market. Those prices are not seen by the retail. And I would watch as retail investors panic, and I would watch as the markets go down on Binance and Bittrex and Coinbase and all of these retail outlets. And I would sit there and watch, and I would laugh as the digital asset investor, accumulated all of them, as much digital assets as I could accumulate, kind of like what JP Morgan did with the silver market. Phase 4 of my plan, all of my buddies would be the phase 4, since this is a new asset class. And as the digital asset investor has told you, it's the first new asset class since the year 1696. And the least amount of money in any asset class, as I told you in one of my last videos, is $7.5 trillion in gold. And that doesn't include the other commodities in the commodity basket. Okay, and so since I know that this is a new asset class, my phase 4 of my plan would be to start opening traditional exchanges. And first, we would open those exchanges and make them available only to institutional investors, and then knowing that we would eventually roll that to the retail masses. I would get exchanges like Bakkt, Fidelity Digital Assets, NASDAQ, ErisX, we would open all of those knowing that we have positioned ourselves perfectly for the massive bull run that's about to happen. In phase 5 of my plan, I would get my buddies. Now, I realize that most people don't believe that the SEC, though it's completely independent of everybody else. Well, just go take a look at who works at the SEC and where they've worked before. I'm not going to name any names. I'm not saying anything bad about any of them, but just all of these people are intertwined on Wall Street, all the way from the SEC to the ratings agencies to the financial firms. They're all in bed together in one way or another, and you don't have to take my word for it. Just look at where they all went to school. Look at where they all worked. One guy works at a traditional financial firm like a Goldman Sachs or JP Morgan, then all of a sudden he ends up at the SEC, or he's at the SEC and ends up at Goldman Sachs or Merrill Lynch. It's all the same game, people. So the last thing and final phase of the phase 5 of my master plan would be to the SEC just miraculously all of a sudden sees the sense in having an ETF for crypto, initially Bitcoin, and then all of crypto. And then the floodgates open, my friends, and not $7.5 trillion, but trillions and trillions of dollars. And in my opinion, there will be somewhere between 40 and 100 trillion in this market before it's over. And luckily for me and my friends, we were able to do what we needed to do to make this market more appealing to us, since we missed entry back when we could have. We just opened up things a little bit and made the entry a little more comfortable for ourselves. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, tell your friends and family that the bull's coming. So don't freak out. Put your big boy pants on and sit tight and wait for the ride. Thanks for listening.